Hi everyone, welcome to today's webinar. My name is Eugenia Perdoso and I'm the editor for Investment Monitor at Global Data. And I'm going to be your host and moderator for this session. We're very pleased to have you with us today as we explore captive insurance in Africa, identifying the right location to mitigate your risks. Our guest speakers today are Vasish Ramkhalawon. He's the Secretary General at the Insurers Association of Mauritius. Then we have Vikramsingh Ramlochun. He's the Managing Director at Guard Risk Group Mauritius. And we have Krishna Bheenick, who is the Managing Director at Africa Specialty Risk Mauritius. So I'm going to give you their bios and some introduction about their careers, and then we're going to start. So Vasish holds an engineering degree from NIT, an MBA from the University of Hull, and professional certifications from the World Bank, the ICAO, and is a Harvard mentor. At his current role, he serves on multiple committees related to financial services, insurance, road safety, and health. He also currently serves on the boards of multiple organizations, such as Business Mauritius and the African Network of Insurers Association. Vikram is the Managing Director of 4 insurance-related entities under Guard Risk Mauritius. These are Guard Risk International, Guard Risk Insurance Company Mauritius, Guard Risk Life International, and Guard Risk Insurance Management. Additionally, he is a member of the FSC's Insurance Committee in Mauritius and is a member of ACAA UK. Lastly, Krishna has over 15 years of insurance experience across Africa, the UK, Europe, and Asia. Before joining ASR, he was a senior manager at Swan General in Mauritius, where he oversaw capital management, business performance, governance, and financial reporting for both general and life insurance. He has held posts at XL Catlin and Munich Re in Africa and Mauritius. Bheenick has a computer science with business and management degree from the University of Manchester. He has 26 years of experience in Mauritius's financial services industry and 23 years in the international cell captive insurance sector. So today's webinar is brought to you by the Economic Development Board of Mauritius. The EDB is the leading government agency mandated to providing strong institutional support for strategic economic planning and to promoting Mauritius as an attractive investment and business center, as well as a competitive export platform and international financial center. So a quick note on logistics. This webinar is browser-based. So if you become disconnected for any reason, just click on the link that you received via email so you can rejoin the webinar with no problem. And for any technical issues, just use the help widget on your screen. And for any additional resources, just explore the related content box. So now, Vasish is going to give us a brief introduction from an industry perspective to start us off. So Vasish, the floor is yours.
Thank you very much, Eugenia. And I don't know, good morning or good afternoon or good evening to all participants. In a nutshell, if I have to speak about the insurance industry, the Mauritius insurance industry, I need to say that it's a well-developed industry, which is regulated by the Financial Services Commission. And our regulatory framework is aligned to what we call international standards and principles. And also, there's a lot of focus on what we call capital adequacy, solvency, governance, and policyholder protection. So if you look at Mauritius, one way of describing it is that it interestingly has a reasonable market, I would say, insurance penetration of around 5%. It is still below the global average, which is around 7%, but 5% if you compare it to the African continent, which if you remove South Africa, which has a very high penetration rate of 11.5%, the rest of Africa would be below 2%. So Mauritius comparatively has, I think the figure 5 is very much aligned to Mauritius. So with a penetration rate of 5% and insurance density of around 550 USD, which is quite good on the African market, because if you look at the insurance density, South Africa is around 900 USD, Namibia is around 700, oh no, it's even less, 200 USD, but the rest of Africa is below 100, and the Africa average is around 40 USD, which is more than 10 times less than that of Mauritius. And if you look at it from that sense, Mauritius has its own challenge, and but we can see the challenges that are posed in Africa. But when you look at the insurance market, what makes us very similar to a lot of African jurisdiction is our insurance premium, which is around 500 million USD. The reason being, in spite of Mauritius having a decent density and a decent penetration, but our market size in terms of population is small. On the other hand, in some other jurisdictions, they might have a low density and low penetration, but they have a bigger population, making the pot size in terms of premium quite similar. So when you look at jurisdiction with around 500 million USD, it poses a lot of challenges, because eventually, now that you have a lot of corporates, globalization, a lot of companies moving into these jurisdictions because of the prosperous economic development that we are seeing, what is happening is that they are exposed to a lot of risks, which are not necessarily what we call traditional risks. They are non-traditional risks, very difficult to access insurance and reinsurance, like, for example, cyber threats, political instability, supply chain disruptions, etc. So Mauritius, as a matter of fact, in other hand, has been positioning itself as an international financial center of repute. And over 30 years, we have shown that we are a financial center which is very reliable. And the insurance sector is fully part and parcel of that financial center. And over and above, so we play our part, and the industry works together to see how we can best serve the African continent. And I should say that the captive insurance pillar became one of the key pillars of the financial center, in which the contribution of the insurance sector has been there, because it helps to provide solutions to the different challenges that are posed on several jurisdictions. For example, one more thing that is very important is that now that everybody is moving toward risk-based regulation, but your regulatory framework in terms of, for example, what is your reinsurance risk default, etc. When you look at it, so corporates are exposed to certain risks. Even if you can have a very good reinsurance structure, but the other hand is that your regulatory framework also is an element part. So in terms of risk exposure, risk controlling, and a lot, so the captive insurance became a very interesting pillar for many players. And just to let you know, maybe before I conclude, is that having seen that importance, Mauritius came with what we call, because Mauritius is regulated under what we call the Insurance Act. And then they came with the Captive Insurance Act in 2015, and recently that was amended to provide for a series of what we call traditional captive products. In fact, we have 5 licenses of traditional captive products in Mauritius: the pure captive, the multi-owner captives, third-party captive 1, 2, and 3, which are defined based on the amount of unrelated business that you can take, related business that you can take, etc. But having said that, it is very important to realize that captive insurance itself is not a recent phenomena in Mauritius, starting with the Captive Insurance Act of 2015. It has been existing in Mauritius since, I think, 1999, because when you look at captive insurance, it takes 2 forms. One is the traditional captive insurance, where we talk about all these different licenses which I've mentioned. The second one is the protected cell company form, where in fact you can have protected cell captive through protected cell company. That has been existing for a long time in Mauritius, because in 1999 Mauritius enacted what we call the Protected Cell Companies Act. So through the Protected Cell Companies Act and the Insurance Act, there's a lot of insurance companies who hold, means external insurance companies, reinsurance companies holding protected cell company licenses and being able to offer a form of cell captives to a lot of their clients. And this is quite a massive business. In fact, if you look at the amount of business going through this, it is quite significant for a size of Mauritius. So in terms of ratio, the whole global sector accounts for 50% of total premium if you would look at general, life, and global. And cell captive is quite significant in the global market itself. So I don't know if that overview is there, but I'm sure that my two other colleagues will talk more in terms of the advantages that Mauritius pose as a jurisdiction and the advantages of captive and more details about it. So thank you, Virginia. I rest my case.
Thank you so much. Thank you so much, Vasish. That was it's great to have some context in terms of how long ago this industry started in the country. So thank you for that. Now we're going to go to Vikram. So Vikram, can you talk us through a little bit how captive insurance works in Africa, and how that location that Mauritius has, it works for them in this industry?
Thanks to Eugenia, and thanks Vasish for giving the introduction with respect to insurance industry in Mauritius and an overview of the captive insurance as well. So yes, I think the first question that needs to be answered is, what is a captive? And it's important to understand that corporates who has a good risk management framework, who takes risk seriously, does understand and would like to have a facility which we call a captive. Here we're talking about captive insurance. So a captive insurance is like an insurance company where those corporates who are serious about their risks, they operate and they place their risks within that captive insurance company. And from that captive insurance company, then they go and they access the reinsurance market to protect themselves. So in a way, it's like a corporate having access to an insurance license, and through that insurance license, they insure or reinsure their own risks, and from there, then they can go and limit their exposure of the captive by accessing the reinsurance market. So in Mauritius, as Vasish did mention, the captive insurance started in the 1990s, and most probably in the 1998. And obviously, we've got what we call the pure captive. What is a pure captive? A pure captive is a structure, is an insurance model where corporates will be putting their risks within that captive insurance company, which they would normally incorporate in Mauritius, and they will insure only the risks of their own group. And from that, it emerges into what we call the third-party captive, and what we call the cell captive insurance model. What is a cell captive? And it's the same. It has the same philosophy and achieves the same thing like a pure captive. But through a cellular structure, corporates, instead of setting up their individual pure captive, they approach a company who has a captive insurance license, and they buy shares within that captive insurer. And then buying shares and subscribing to the special type of shares within that insurance company, they become owner of a mini insurance company within that captive license, which gives them the right to do right insurance business of their own group. If we're talking about first party, they will write insurance for their own for their own company and the subsidiaries and associates around them, and they will use that cell captive where they will also access the reinsurance market. And the whole idea of having a cell captive is actually to build up capacity to a point where they can sustain risks within that captive insurance model, and they will protect themselves by going onto the international reinsurance market. Then from the first captive cell captive, it moves into the third-party captive as well, where corporates will be, or any serious player in the financial world will use a third-party cell captive, and they will sell insurance product to their client base. So this moves from the model of first party into the third party. Examples would be, let's say Vodafone tomorrow wants to set up a cell captive, and Vodafone will be insuring the handsets of their clients who are using their network. So they will be selling insurance on the handset to protect the covers, the cell phones, and they will be selling insurance to their client base. So that makes it a third party cell captives. So this is the beauty of cell captive in comparison to a pure captive, where by buying shares within an insurance company, which is a captive insurer, then all the administrative and the regulatory requirements are taken care of by the captive insurer, and the cell captive owner concentrates on the core business of its group, and it continues to do, and the rest of the regulatory and mandatory requirements, like by having actuaries and running a proper insurance company, that is taken care of by the captive insurer. And this works for the advantage of the corporate who decides to go into the cell captive route. And from there has also been another type of captive, which we call about the rent captive, which in the African continent, I mean, is also known as contingency policies. So in that structure, mostly on a first party transaction, the corporates will be, instead of buying shares and own a cell within the captive insurer, they will rent a cell, and they will rent the capacity of the captive insurer, and from there they will reinsure themselves and also protect themselves by accessing the reinsurance market. So that's in a nutshell how a cell captive and a pure captive works. In Mauritius, we have the ability of doing pure captive under the Captive Insurance Act, which Vasish mentioned, and we have the possibility of doing cell captive as well under the Insurance Act and also under the Captive Insurance Act. And recently, Mauritius also allowed for the possibility of doing third-party captive within the Captive Insurance Act. There are different ways where the third-party captives third-party cell captive works in the Insurance Act, and the same thing happens under the Insurance Act, under the Captive Insurance Act, but with some limitations. But all these are possible within the Mauritian regulatory framework, which governs the insurance industry, and is also obviously governed and regulated by the Financial Services Commission in Mauritius. Mauritius has a risk-based approach from a capitalization perspective of if somebody wants to open a cell. So the capital requirement is limited to the appetite of the cell owner, whereas there is a minimum capital requirement to set up a pure captive. But I mean, the cell captive capital requirement is very much risk-based according and upon the appetite of the cell owner. I think I've spoken about Eugenia. I've spoken about what a captive and a cell captive means. I think I may rest my presentation.
All right, thank you. Thank you for walking us through that. I think you made it very clear, the differences between the different products. So, Krishna, do you want to talk to us about how captive insurance works in Africa and why, how it might be different in Africa than somewhere else?
Sure. Hi, everyone, and thanks for giving me the opportunity to talk about captives and the Mauritius jurisdiction and how that is, as Vasish said earlier, one of the key pillars in the financial services sector. So let's talk about Africa, but let's also take what Vasish was saying earlier about insurance penetration. We move from insurance penetration and we start talking captive penetration, okay? According to Captive Intelligence, which is a publication on captives, the captive penetration rate in the continent, so we're talking 54 countries, is around 3%. We'll exclude South Africa, which is quite a sophisticated market in terms of captives. So that's 3%. One of the reasons that organizations, conglomerates, DFIs, multilateral banks, etc., are looking at captives is one of the main reasons is capacity. Okay, there is a lack of capacity, and when I talk about capacity, sorry, when I talk about capacity, it's basically access to insurance risk capital. So the ability for insurance companies to underwrite risks in Africa, especially for very sophisticated risk or what is referred to as uninsurable risks. As Vasish was saying earlier, something in maybe cyber. We talk about some specific risk in mining, maybe some kind of energy specialized risk or construction risks. So there's a lack of capacity with regards to insuring those risks. And some organizations that have proper risk management, as Vikram was saying earlier, opt for the captive route because they can then access capacity. How does that work? They create their own structure, so their own vehicle, their own entity, which is known as a captive, okay? They then basically insure or reinsure via that captive. So they have access to capital, which they would have injected in that entity itself. And then whatever they want to retain in that entity as risk, they will, and they can then reinsure. So it's a mechanism where they can basically manage their balance sheet and risk via the captive and also access the reinsurance market. So with that lack of capacity, conglomerates, organizations, again, decide to basically use a captive as an alternative risk management and risk transfer, as we call it in the jargon. One needs to note that by and large, even if there is what is referred to as the local insurance companies in the local jurisdiction, so let's take Kenya, for example, okay? By and large, reinsurance of those insured risks will be done outside Kenya. And that is, again, because of a lack of capacity in the jurisdiction itself. So instead of an organization having ultimately the reinsurance with an external organization to the country, if they have good risk management and manageable loss ratios, so when I say loss ratio, it's essentially how much of losses are they basically paying with regards in respect of the premiums, so the ratio of losses to premiums. They will basically like to opt for a captive structure because first thing they will recycle the profits and the premiums into the organization. But secondly, as I was saying, it gives them access to capacity. There are other reasons specific to other organizations that make it such that they like a captive structure. I'll give an example. In Mauritius, we have TDB, the Trade Development Bank, a multilateral bank that has created its own captive. Okay, one of the reasons multilateral banks or likes of multilateral banks like DFIs will like to basically create a captive structure is they get a fair amount of capital relief. So we're talking specific credit insurance here. Yeah, with credit insurance, you essentially wrap projects that are financed by the banks. So the capital allocated to those projects are insured with a credit insurance, and that allows the bank to reduce the capital allocated to such projects. I was just giving that example to illustrate that in so many cases, over and above the generic reason that is often provided to create captives, there are also other reasons that are quite strategic. But it depends on the organization, it depends on the jurisdiction, it depends on the line of business they are looking at, it depends on what capacity they can access, and obviously their own risk management philosophy. With regards to Africa, there's a fair amount of education that needs to be done, but it's something which I think jurisdictions are getting more and more familiar with. And again, I will exclude South Africa on that because South Africa is very sophisticated with regards to their captive understanding. So I think with regards to Mauritius now as a jurisdiction to attract those captive structures, Vasish already explained quite a bit about the regulatory landscape and the ecosystem. Vikram provided a lot of information in terms of the structures. One thing I would just add is the AFCFTA, so the Africa Free Trade Continental Agreement. That's one of the other reasons that from a strategic perspective, because Mauritius is part of the AFCFTA, is also a good reason for various jurisdictions or conglomerates in other jurisdictions to consider Mauritius as a jurisdiction to set up captives. In addition to that, if we think about jurisdictions offering the captives as a product in terms of financial services offering, Mauritius is a stable and has a vibrant international financial center. It's investment grade rated. There are only 2 countries in Africa that are investment grade. Mauritius is one of them. And I think that speaks for itself. Captive owners as well will have access to various other service providers, be it auditors, banking, offshore management companies who act as agents for those captives with regards to liaising with the regulator, as well as lawyers. So all in all, I think Mauritius is an attractive jurisdiction for various African countries to set up their captives in Mauritius.
Right, thank you. And Vikram, what role does fintech play in this industry? Why is it important?
Okay, Eugenia, when we talk fintech, we're talking about technology in the financial space. And when it comes to insurance, we grow from the fintech world into what we call the insurtech. And what does that mean? So insurtech in itself, which is a subset of the fintech, is actually the use of technology in the insurance world and make insurance a lot more accessible in a cost-effective manner. So that's about what fintech and insurtech would mean. And why do we do that? Why does that make a lot of sense? We are today living in a world of data. I mean, if you look into even the accounting standards now, I mean, we're following the IFRS 17, which replaced the IFRS 4. So we're talking about granular data, and the more data you have, the better you can rate your risks. And the better you rate your risk, the better you get a better pricing, and you also access reinsurance capacity in a much cost-effective manner. So this is the very principle and idea of what insurtech means in a fintech world. So who would generally use that, and how do we use that? I mean, I've been in the captive and self-captive insurance world for 23 years. And I've seen captives and self-captives starting with the traditional way and now moving into the insurtech world. Out of my experience, I would advise the most I would say something that really attracted my attention has been on crops. So you see today you see people putting up captives and self-captives in place, and they are insuring crops, and they're using satellite, they're using technology, and they're using satellite to monitor the growth of those crops. And insurance are being sold on those crops even before they are being put, even the seeds are even put into the soil. And those, as soon as those crops grows, then I mean they will monitor the level of moisture in the soil. They will monitor the level of growth until the time that the crops is at a position that it can be harvested. So this is how technology is now getting involved in even insurance world. And what does that mean? It means that the reinsurer who is sitting behind is actually having the possibility of putting reliance on the insurance company, on the captive insurance company, which is monitoring those types of projects in a granular level and having data. And they provide those data to the reinsurer, and then they benefit from a better pricing, a better reinsurance pricing. And that also gives the reinsurer the confidence that those captive insurance companies are having skin in the game. And it changes a lot of the dynamics. The more skin the captive insurance company has in the game, the better confidence it gives to the reinsurance companies, where the reinsurance company is going to say, but I can trust those guys. They know what they're doing. They've got data. And that's what InsurTech is about. It's about having data, and you can demonstrate, you can show how these things are working, and you show that you are in control. So this is one beautiful thing that I've seen where insurance companies and captive insurance companies are using satellite data and satellite now to monitor risks. The other types of examples that I can give is something very simple. You talk about micro lenders. Micro lenders are now is a very prominent business into Africa, and within what guard risk in Mauritius. We've seen that micro insurance is something that people want, and is a very lucrative business to place under a captive structure where data can be collected on those credits that are being advanced, and they can monitor those credits, and those data sits in-house, and it helps to monitor claim, to monitor what Krishna said in terms of loss ratio. So the more information you have, the more you can demonstrate that you can control your loss ratio, you can control your own business. So you're controlling the inherent risks, and you're controlling you're also putting in place controls where you can show and demonstrate that you have those things in place. So it only helps you to build capacity, and the more capacity you build within the captive, it means the more risks you can take. So then you can increase the number of products, you can increase the territories that you are covering. Today, I mean, if I'm going to talk guard risk, we write business into Africa, and most of our business are now moving from South Africa into Africa. You're talking Uganda, Tanzania, Kenya, Ghana, Namibia. I mean, we've got businesses emanating from all these countries within Africa who uses the guard risk cell captive structure, and those businesses are flourishing. So this is how InsurTech and FinTech is actually making a lot of difference, and technology is making a lot of difference within the world of captive captive insurance. Other things you can talk about are banks. Banks now using their own license and setting up their captive, and through that captives they can provide insurance. You name it now. I mean, we're not talking about the corporate insurance where the bank or the corporate are selling insurance just to protect themselves. We're talking any product which they can push out to their client base. I'm talking third party captives. So now you have access to those data. You know who are you dealing with. You can show that you're controlling those products, and you can know which product is making is profit making and which products are loss making. So you can enter markets and you can disengage in those markets depending on the experience that you have, and all that are coming through data. And where you get those data, it's about technology. So that's another one. You talk microinsurance, you talk banks, you talk stores, you talk travel insurance. The use of technology in all those industries makes a lot of difference. The other thing I would like to, if I do have time, I would like to touch base on the administrators, what we call in our jargon binder holders. Even today, you've got affinity business. What is an affinity business? I mean, it's like tomorrow BMW wants to sell insurance. So if in African countries, even from guard risk, through guard risk, we are BMW is selling insurance, but I mean, BMW does not own an insurance company. So who's sitting behind that? So it is a captive insurance company which is sitting behind that, or a sell captive insurance company sitting behind that, which allows those corporate to sell an insurance to their product. If somebody is buying a BMW, a Toyota, you name it. I mean, there is a BMW insurance which is going out, and there is a Toyota insurance which is going out, but neither Toyota or BMW has an insurance company. So they're doing that through their captives. And the data that they collect from that, using their technology and using what they can use from an insurtech perspective, allows them to control and have access to all those data, and also to that market. They are able to show a better face, and that's how affinity business are growing today. Even with administrators, even with the UMAs. I mean, underwriting managers are now going big on insurtech, because the bigger they are on with technology, the more they can underwrite and the more they can demonstrate that they are able to do a great job. And how does that gets valued? The reinsurers who's sitting behind actually sees that the captive insurer or the service provider, whether the binder holder, whether it's a UMA, whether it's a financial services, or what we call an FSP, or the affinity business, they have skin in the game. The more skin you have in the game, the better you can. I mean, the reinsurer trusts you. And yes, I mean, I'm not sure if I still have time, but if I hope I've been able to explain to you how insurtech makes a big difference in the captive world.
I think you have very well. Thank you. So I'll ask you guys one more question, and then we're gonna take some questions from the audience. So if anybody has any questions, send them in now, and we can get to them after. This was for all of you guys. I was wondering if you had any more thoughts you wanted to add in terms of why Mauritius, specifically, is the best place for captive insurance. Why should companies choose Mauritius? You already mentioned a few aspects as to why, but if you guys want to add anything else, the floor is yours.
If I may, and obviously I'll let the rest of the panel also provide their reasons. I think Mauritius is stable, vibrant international, has a stable, vibrant international financial center, and it's a well-regulated ecosystem. That in itself, I think, will provide confidence to those who want to set up captives in Mauritius. You have all the products that you need from a first-party perspective, as well as a third party, as Vikram and Vasish said earlier. The third-party legislation was enacted recently. So for someone who is setting up a captive, let's say from a first-party perspective, it's good for them to know that in future, they can actually provide third-party insurance as well to their customers, for example. Vikram just gave an example from an affinity business perspective. You have access to bilingual educated workforce. So from a Francophone and Anglophone perspective, with regards to the African continent of 54 countries, it's not an issue. I already mentioned the fact that Mauritius is one of the two countries that is investment grade. We've signed up to the African Continental Free Trade Agreement. From a tax perspective, I think there are some very interesting incentives as well. Any captive that is set up from day one, they have a tax holiday of 10 years. So the profits are not taxable, and there are some interesting double taxation treaties between Mauritius and some African countries. You have a PCC structure that you can also have. So both pure captive, sell structure. And I think, last but not least, Mauritius itself, in terms of access to the reinsurance market, is well located and has access to all insurance markets. So we have a very vibrant insurance sector, lots of insurance and reinsurance brokers, and Africa is in Mauritius, Africa Specialty Risk, so us, we're in Mauritius. We have our own, as a matter of fact, syndicate as well, that's providing capacity to Africa. So that's a AA- rated, S&P rated capacity. And we have so many partners we work with that can de-risk investments in Africa. And then you have other players in the market as well. So I think you put all of that together, it's a very interesting ecosystem to push the collaboration from an African perspective perspective, and basically African companies. So that's what I think is very interesting with the Mauritius jurisdiction in terms of captives.
Yeah. Maybe if I can
Virginia,
add,
if I may add, because Krishna has very rightly mentioned the advantage that the jurisdiction provide from a legal, tax, and so many things. But what someone has to realize, what is very important for a corporate looking for a captive, is that your captive structure should respond to the challenges and difficulties that you have, your requirements, which unfortunately you're not probably getting it from the traditional insurance market. For example, there are certain type of sectors which may not be getting insurance. For example, if you take Mauritius, you have the agricultural sector, which Vikram was mentioning about microinsurance. All that, there's no risk appetite for it. You also have a situation where someone may not, the traditional insurance are not having risk appetite because their loss ratios are too high. So interestingly, in Mauritius, we have studied all the different challenges that really corporates are facing and for which the traditional insurance market is not able to respond to their specific requirements. And we have crafted our legal framework in such a way that it really responds to all these requirements. So by only if you look at the pure captive, for example, by having 5 different licenses, so it really helps you to, for example, we have a pure captive, but we also have a multi-owner pure captive, which is very responsive to a particular sector. And also in terms of how you will not only protect companies for which you have probably 50% more in terms of ownership, but what happens if you have 22, less than 50%, but more than 20%? What happens if you have, probably you don't have an ownership, but you have a sort of relationship with an insurable interest? So all these have been taken care of in the regulatory framework. And I think the regulatory framework here is key. And that is something that is very, very important. You know, just to give you an example, let's say you are in another jurisdiction. There, what you have the insured, which is a company looking for insurance product. And you know very well that the insurer for which you are going to transfer your risk will not have capacity. So what they are going to do, they are going to transfer that risk to a reinsurer. And if your regulatory framework is not robust enough, and for example, your regulatory framework says that even if the reinsurer is not rated, you only have a reinsurance default risk of less than 10%, which means as a corporate, when you look at such regulatory framework, and you also look at the reinsurer, if you are risk cautious, you would say, okay, I've transferred my risk to someone, but is that risk really the solution that I'm looking for? And that is why it is important to ensure that you're within a regulatory framework that really provides you with the risk management that you require and the captive structure. Because at the end of the day, captive is how you structure it in a way that it responds to your requirements. And this is where Mauritius has cautiously worked on its regulatory framework. When you take the Protected Cell Companies Act, you take the Insurance Act, you take the Captive Insurance Act, you also take the different risk management rules and capital requirements that we have. I think the jurisdiction is really responsive to those requirements, in addition to all the other advantages that it poses in terms of tax holidaying, in terms of I think responsiveness to compliance, FATF, and all those advantages that we provide as a global sector. That is very important. The framework is very important.
All right. Thank you. Sorry, I just think we're going to move into the questions now, just because we're a bit tight on time. So I'm just going to go ahead and ask that, and then whoever wants to take it can go ahead. So in the Q&A, how do I obtain an insurance license to set up a captive insurance subsidiary in Mauritius? And what types of captive insurance entities does Mauritius recognize? So I don't know, Vikram, do you want to take that one?
Yeah, I can take that one. So we're talking about the types of captives and how long it takes and how do we set it up. So captives and cell captives in Mauritius, as we've explained, there are two sets of regulatory framework here. There's one which is the Insurance Act and one which is the Captive Insurance Act. And whether it is a cell captive or whether it is a pure captive, you need to apply to the Financial Services Commission, and this Financial Services Commission will look into the rationale of that corporate who wants to set up a captive or a cell captive. And as we all know, Mauritius is a serious player with the anti-money laundering and we will be requiring information up to the UBO. So there's the insurance side of it, and there's the anti-money laundering side of it. So we've compiled all those information together with the business plan and the financial forecast, which the actuaries will have to sign off. We pack all those, we're going to send it to the Financial Services Commission. The Financial Services Commission will then look into it and approve. Obviously, they will have questions, and the company who's putting up the application will have to answer. And once that passes through the test with the Financial Services Commission, the FSC will approve it. I would like now to spend some time here just to make sure that people understand. In a cell captive, what we call the protected cell captive, it's important to understand Mauritius legislation, which we call the PCC Act, is such a beautiful act in the sense that each individual cell is licensed by the FSC on its own, and it is ring-fenced, not by a contract, but by law. The law ring-fences each individual cell as if it recognizes them as individual insurance companies. And what happens if one cell goes burst or is having a solvency problem or is having a capital problem, it does not affect the other cell. So it can be dealt with separately. That's why in Mauritius, for a cell captive and a pure captive, when you're sending an application, it licenses each individual cells and the pure captive as well, which would be under the Captive Act. So that's the beauty of it. And once the FSC approves, and then the cell can start operation.
All right. So
Virginia, if I can add something on this,
Virginia,
if I can.
We have some more questions from the audience.
Let Krishna go on.
Yeah,
we have some more.
What I wanted to. Sorry, go ahead, Eugenia.
No, we have some more questions from the audience, and we have limited time, so I just want to make sure we get to others.
Sure.
Are you okay to carry on? You can take the next one. So another question that was sent in is, what is making African companies in high-risk sectors switch to captive insurance models, and what are the limitations of traditional insurance models?
So I'll take that, and obviously I'll let the rest of the panel comment further. I think what's making African companies in high-risk sectors switch to captive models, it's quite clear, again, going back to what we were saying earlier, there is a lack of capacity. So for a company in a high-risk sector trying to invest in a project where they actually need insurance, the ability to get insurance and the capacity to insure may take time, and they may not even find it. So they know their business, they know how it's working, they have good risk management policies, probably low loss ratios. So they actually decide to set up their own captive. So I think capacity is and will continue to be a reason as to why high-risk sectors will consider captive. In addition to that, as we've said, there are what I refer to other strategic reasons as to why an organization will basically consider captive. And one of them is basically the fact that they can get other advantages. So setting it up in Mauritius, for example, you'll have access to a jurisdiction where you can use the mechanism to have access to reinsurance markets. So that's the second one. If you take a a bank or credit houses, as Vikram was saying earlier, you will also be able to get capital relief on the amount of capital that you basically have to allocate to projects. What are the limitations? I think limitations may not be basically the appropriate word. It's just different models. Okay, so it depends on the context of a company, of the organization that want to basically decide how they are going to use captive as an alternative to traditional insurance mechanisms. And again, some will basically use it for at the risk of repeating myself, to access capacity. Some may want to essentially retain the profits and the premiums in their own group and use that as an additional revenue stream. Some may want to expedite projects quicker than they would normally do in the case of accessing insurance in the traditional way. So it depends on the context of the organization and what they actually want to do. Cyber, which is something which Vasish kept alluding to, is sometimes very difficult to get insurance on. So you can use cyber and have a captive set up for your own cyber insurance, or you can have a group of companies that will want to essentially provide cyber insurance to themselves. And again, they can use, Vasish explained that earlier, with the multi-owner, perhaps captive setup. So you have a group of companies coming together and you create a captive for that. So those are the main reasons, I would say, that are attracting some high-risk sectors, as you said, into the captive route as an alternative risk mechanism, as we say in the sector.
Eugenia, if I may come in.
Yeah, go ahead.
I think the question, when this being said, has been asked with companies with high risks. I would like to clarify that a cell captive is not only a vehicle for high risks. A captive is built for corporates or for people who want to create capacity, who wants to access that underwriting profit. And the high risk client who would be setting up a cell captive would be using, so whether it is a high risk or whether it's a low risk, a captive has its place. A captive is not only for clients with high risk. When we call high risk, we're talking about risks which are uninsurable, or if you look into what happened to the market, there are several people who comes from the insurance background. Reinsurance has become expensive. Reinsurance today is expensive on a lot of products. So how does insurance company deal with that? So whether the risks are now uninsurable, whether the risks are now highly priced, when you've got a captive, you build capacity within the captive. And the more they create capacity, the less you are reliant on the reinsurance company. Additional to that, it gives the reinsurer comfort for them to take your risk. So we've seen clients, like in the conventional market, it's getting very difficult to place risks, to place reinsurance cover. But because this is being done through a captive, where data is available, where the reinsurer sees that the captive has skin in the market, they were the first one who will be burned first before the reinsurer gets burned. It gives confidence. So having a captive is a lot about creating capacity and is a lot about showing that, you are ready to take risks for yourself. And that's where risks which are highly priced, which are uninsurable in the market. And here we're talking about Africa. Africa is a different animal. Africa has got its own culture. Africa has got its own appetite for risk. It's not the same mindset that you have with different parts of the world. There's a specific way of doing business in Africa. There's specific way of risks there's specific risk within the African continent. So these people, the best way for them to deal with that is, if they've got a captive, then they are the best people to understand their own risks, and they place it within the captive, where they manage it, and then that gives confidence to the reinsurance market. The reinsurer will have more leeway to participate. We've seen that, and this is statistically can be proven, that captives, when you can show you've got the data, then you really have a better chance of buying reinsurance cover, which might not be possible or very highly priced if you were going to go on your own, via the conventional market. So that's what a captive does. Whether it's high risk, whether it's profitable risk, whether it's low risk.
Thank you for that clarification. So we're going to take one more question from the audience, and then we're going to wrap up. So how does the application of fintech support captive insurance in Mauritius? And what sort of Mauritius-based fintech solutions or insurtech solutions exist for setting up and managing a captive company?
Eugenia, maybe you can come again. I mean, I'm not sure whether it's my connection or whether it's everybody's connection. Can you come again?
Can everybody hear me?
Yeah.
Yes, we do.
Now we can, yeah.
All right, so I'll ask a shorter version of the question. How does the application of fintech support captive insurance in Mauritius? So, what fintech or insurtech tools or solutions are available in Mauritius to support the captive insurance industry? So anyone that wants to take that one, can go ahead.
Maybe if I can say something about this, is that it is important to understand that any insurance company, be it a captive or insurance company, we have what we call an insurance value chain, okay, from your relationship, etc. And the role of insurtech is over the value chain, how do you bring efficiency in terms of more data, improving the speed, improving cost effectiveness, improving variety, and improving variation. Now, many captive insurance, in fact, are having more needs for insurtech than other traditional insurance. Why? Is because it's true that you don't need to have a need for capacity or response, etc. But many companies going into captive, because their risk exposure are not finding interest from traditional insurance, which means that they are in sectors where it is difficult to have data, it is difficult to measure. And there's a lot of challenges. And in fact, the only way you bridge those challenges by, like we were talking, using satellites, using cameras, capturing data, in fact, is by using technology, and those data are converted and analyzed through right fintech and insurtech to ensure that it becomes something that you can work out a proper insurance product. And this is why sometimes insurtech and fintech becomes very important for a lot of captive structure because of the nature of business, because somebody will probably go for a traditional insurance if that product is available because it's off the shelf. But going for a captive is because you have challenges that are uninsured, or there's exposure that you don't get. And technology is really, really a mean that is bridging the gap, the challenge that we have. And I think this is something. Well, in Mauritius, you do have companies working in the fintech area. You have the Mauritius Africa Fintech company hub, which was created by government, which is looking at all these challenges and helping insurtech to bridge, etc. We are having the Mauritius Research and Innovation Council providing opportunities and even finance opportunities to insurtech and fintech companies who can bring solutions to such things. So the structures, the possibilities are there, and I think people should capture the opportunity. But one thing very important, Virginia, because when we got the first question, I wanted to say something. The reason why I wanted to say that is because I don't want us to leave this webinar without a way forward. Because someone was asking about how do we do. But I think one thing is important to mention, that if I would recommend everyone who is interested to go on the Financial Services Commission website. Under the website, there is something called supervision, and you will have a register of licensees. So if someone is interested to know about cell captive, so they can click. It will tell you which act you want to be. You will see captive insurance, you'll see protected. You'll see a list of companies like Guardrisk, and will be one example, who are having those licenses. You can contact them and you will know. If you're interested with pure captive, you can look for management companies, and you can also look at different companies. You will find management companies, you'll find a list. It will be very helpful, and they will. It's quite resourceful, the website, in terms of the list of licensees, the different licenses that have been given. And I think it could lay way forward, and that would be interesting for many people.
All right.
Yeah.
Well,
Maybe if I can add, Eugenia.
We actually have to wrap up now. If you want to say something very, very brief, go ahead. But
yeah, maybe I won't take too long. I would just like to say, in Mauritius, we've got the ICTA Act, which is the Information Communication Technology Act, and there's also the Data Privacy Act. The Data Privacy Act follows the GDPR, which is also applicable in the UK and in Europe. So we've got mechanism to protect data, and anything to do with technology is about protections of data as well. So we do have all those protections around, which makes Mauritius an interesting player in the international space, where people can sleep at night thinking that the data is protected, and there are tribunals in Mauritius where you can sue people for breach of data privacy. And also, it's important when we're talking captive, we're talking about risks emanating from anywhere in the world, whether it's Africa, whether it's Europe, whether it's Asia. It's everywhere, and it's a value chain. So it starts from where the risks is until the time it gets insured or reinsured into a Mauritian captive structure. So all these get into play. So you can benefit from what the information technology capacity is in Mauritius, and then there's also the in-country territory, the territory where those risks are, which will also have their own like information technology and all those protections around. So it's very good barriers, and it leads to a way of doing business in a much more effective and electronic way.
all right. Well, thank you all for your very thoughtful answers. That brings us to the close of our panel. Thank you again to our speakers, to our audience, to the EDB Mauritius for sponsoring today's session, and to all of the attendees. You'll receive an email tomorrow with details on how to access the on-demand version of this webinar. You can also access it via our website. It's arena-international.com/events. So thank you once again for joining us today. We appreciate your participation, and we really hope that you found the discussion informative and engaging. Hope everybody has a nice evening, rest of your day, wherever you are. So
thank you.
Thank you very much, Eugenia.
Thank you.
Thank you very much.
And I would close it by saying welcome to Do Captives in Mauritius.
That's a good message.
Thank you.